Good afternoon. I am Hongyi Fan from the team kowloon Buffett. I'm going to give a presentation about our stock trading activity. Here is the result we got from the trading month. The trading period is started from October 2nd to November 22nd. We got portfolio return of 10.37% at the end of trading data. We bought all the stock chosen from the strategy at once in October 14th, 2019, and we have fully invested most of our fund in that date. We only hold $6,195 in hand at the end. We did not trade frequently during the period. Because the strategy we picked that does not require frequent adjustment within 1 month period, I can proudly conclude that our group has traded rationally by following the strategy rule built during the portfolio establishment process. Our objective has been achieved in the selected trading month. So our presentation has 4 parts in total. I am going to start with the project objective and then move on to portfolio establishment, and eventually I will analyze our portfolio performance and give conclusion based on comparison with other benchmarks. The first part is the project objective. Our team's objective is to have higher return than SP 500 within 1 month period. This goal is decided to based on our team's risk tolerance level, which is measured in the portfolio established process. The second part is the portfolio establishment. Move on to the most crucial part of our project. This is the logic chain of how we establish our portfolio. Firstly, we want to find out the risk tolerance level of our group. So we all take a risk assessment test and get a result that most of us are moderate risk investors. So we have general understanding of our risk tolerance level, and we were able to set up the objective based on how much risk we can accept, as well as how much return we want to achieve. After that, we chose a strategy that can provide corresponding result with our objective. And eventually, we pick stocks based on the strategy we chosen. Finally, we performed backtesting to make sure whether their performance is as same as we expected. Let's get into the details of steps. This is the sample of our risk tolerance level quiz we used. Most of us are average or moderate risk tolerance investors, ranged between 23 to 28. Therefore, by following the rule of higher risk and higher return, we believe that as moderate risk investor, our accepted return should be a little bit above the average return of SP 500. So we have set our objective as winning SP 500 index within the 1 month trading period. Move on to the strategy choosing. Our team members don't have a lot of experience in performing stock trading, so we decided to establish our portfolio based on an academic strategy provided by our professor. We have carefully read those strategies and decided to choose one that is based on financial ratio of the company. Because firstly, it is fundamental analysis of the company's performance. We think it is not as controversial as technical analysis. It is the most direct way that shows whether the company is profitable. Secondly, those financial data is easily accessed from public source. We can simply find those information from Bloomberg. The last reason is that we have a lot of accountants here, so we are familiar with the financial data. And for the result, we exclude the market factors and choose one financial indicator from each topics. We choose SUSG in event, PB ratio in evaluation, and ROE and EBITDA in fundamental. Among those 4 strategies, our main focus are SUSG and PB. ROE and EBITDA are complementary strategies that are related with SUSG. I will discuss each strategy later. So now, our research goal is to find out if those strategies are still applicable to current market in a short-term period. In other words, we want to discuss the validity and practicality of applying those financial indicators to the real stock market. After establishing our portfolio, let's further discuss about how we realize this portfolio by picking up the stock first. According to our goal, we seek for an average return that is higher than the return of S&P 500. So we try to find out some stocks with good performance from these certain 500 companies. After we confirmed the strategy, we started to find the data we need. With the help of the database in Bloomberg, we can match the target company by classifying all indicators. Here I am going to talk about PB first, as PB ratio shows the firm valuation made by investors. Company with lower PB ratio indicates a growing potential of market price, which might lead to higher return. Therefore, we choose 50% of stocks with lower PB ratio listed in the SP 500 index, which found out 236 matches. After that, according to Sustainable Growth and Stock Return Theory, the value of SUSG represents the growing rate of book value. In this case, we use data in 2016 and 2017 as our sample data. SUSG is calculated by book of equity in 2017, divided by book of equity in 2016 minus 1. The higher the SUSG, the higher the risk and risk return. So we choose 75% of stocks with high SUSG. We got 177 matching results. Also, we got ROE ratio and EBITDA of these 2 years, since both factors represent the movement on equity, reflecting a strong development in the future business and operation. Those developments may all be reflected into future earnings and create greater return on the stock market. So we selected stocks with top 50% of ROE and top 40% of EBITDA. With further classification, we complete our process and got 28 results we need. Here is the final list of stock we choose to trade. We have chosen companies with PB range from 3.21 to 1.43 and SUSG range from 54% to minus 8%. ROE is ranged from 12% to 33%, and all companies selected have more than 14% of EBITDA growth. We believe those companies all have great financial performance in the last 2 years, and their stock performance may win the performance of SP 500 index in the 1-month trading period we selected. In order to make sure those stocks performed well in recent months, we use Bloomberg to backtest all of them during the period from September 1st to September 30th in 2019. We want to make sure whether our portfolio has similar trend as anticipated. As you can see here, our portfolio is represented by red line and has achieved return of 5.15, which is higher than the SP 500. It does fit our expectation. Therefore, at this stage, we were all satisfied with the result and we invested basically all of our fund into those stocks. In addition, for further analysis, we will use the backtest as a comparing benchmark with our performance result in the conclusion section. The third part is the portfolio statistics and performance. For those companies we pick, we can find there are 34.4% of them are financial companies and 22.7% of them are industry goods companies. Our return has achieved 10.37% return in total. The portfolio also has achieved 3.53 Sharpe ratio, 1.85% alpha, and 1.08 beta. For the Sharpe ratio, it is a risk-adjusted measure calculated using standard deviation and excess portfolio return to determine reward per unit of risk. The higher the portfolio's Sharpe ratio, the better is risk-adjusted performance. Comparing with backtesting result of 4.84 Sharpe ratio, we found the Sharpe ratio has decreased in the actual trading month. It is a little bit unusual, since a higher return normally will lead to a higher Sharpe ratio. However, our portfolio got lower ratio when the return is higher. It means the higher return we got might be because of over-excessed risk in the portfolio. Our portfolio return might not be promising in the future, and for those beta and alpha we got, it fits our risk tolerance level as we have set up early. We have set up a moderate risk level that expects a little bit higher risk than the benchmark. The beta of 1.08 means our portfolio is just 0.08 more volatile than the benchmark, which fits our expectation. For the alpha, it is calculated as actual return of all stocks in open position minus expected return of the stocks in open position, and our portfolio occurred 1.85% of unexpected return, which fits our expectation of moderate risk tolerance level. Let's compare our performance with several benchmarks. The most important benchmark for our portfolio is the SP 500. Our objective is also based on this benchmark. As you can see from the picture here, we can happily conclude that we have achieved our goal of winning the SP 500 index. Our spread return is 3.01%. As comparing with the backtest, we even achieved higher return in the real trading month. By comparing with our classmates, we ranked at third place at the beginning of trade, then we became the second and dropped to rank 4 until the trade end. Our earning is consistent and moderate throughout the whole trading month as we expected. Based on analysis above, our team has learned a lot during the trading process. We have successfully built a trading portfolio using rational strategy and achieved our trading goal in the 1 month period. Thank you for listening.